Another way to look at this model, right? This one specifically is a sell model. Another way to view this is if you can imagine that this is a bearish candle. Wait, what? Right? Yeah. Imagine this as a bearish candle because that's all it is, right? It's an open, it's a high, it's a low, and then a close, right? The start of the model begins on the left side here. So we have our open, we trade higher, we create the top wick of the candle, then we trade lower, creating the bottom wick, and then close somewhere inside here. Right? Open, high, low, close. Right? The open is your accumulation, right? So stage one of the step one of the market maker sell model or any market maker model is the original consolidation. Okay, that's this. Then you have accumulation. Then we move higher. Sometimes we can have a second reaccumulation. Then we have our smart money reversal in the gray here, right? This is the top of the wick, right? So you can be a seller somewhere in here after the smart money reversal. We're going to try to get in either on the first stage of distribution, which is this first red box, or we can get in on the second stage distribution, which is the silver bullet. This is ICT's bread and butter right here, second stage distribution, because after that, we get speed down, taking the sell side underneath the original consolidation or creating the bottom wick. Okay, so here we have the PM session from today, May 1st. Okay, at 2 p.m., we have the original consolidation, right? This is our green box. We drive higher, first stage accumulation, right? This is FOMC. This is the conference and everything going on. And then we drive higher. Okay, we reaccumulate one more time, tap into this bullish fair value gap, and then drive one more time, reaccumulating higher into a key level, right? 15-minute fair value gap, right? We then get the smart money reversal. We turn around there, drive lower, first stage of distribution, right? Tap into this fair value gap here, drive lower. Then you have your second stage distribution, right? This is your silver bullet. Couple chances to enter in there, and then you get speed all the way down, creating the low underneath the original consolidation, then it comes back into the close. From 2 to 4, right? If you look at this as a 2-hour candle, you have the open, okay? 2 o'clock opens, accumulates, creates the top wick, accumulates again, and then drives lower, creating the bottom wick at 4, and then closes. Okay. Now let's break this down. You have your original consolidation, right? We have this box from 2 to 210, right? We create this range in here. Price messes around in here with the news. We manipulate higher, lower, right? Taking both sides of the market here, right? Inducing sellers with this gap, buyers with this gap, back and forth until we finally move higher. But what are we doing here? If you notice inside of this box, CE, or 50% of this green box in here, notice how the wicks drive lower, but the candle bodies start to trade higher, right? We then drive even higher here. You get your reaccumulation, which is 2 to 2.5, right? If you go back in the previous video from last week's lecture on Monday, 2 to 2.5, you will generally get a reaccumulation, tap back into this bullish fair value gap. If you wanted to trade the buy side of the curve, this gap is your entry, right? Silver bullet around 2 to 2.5, reaccumulation, and then boom, right into the 15-minute. Now, how do we get these levels? Well, we're just pulling standard deviations from the bottom to the top of the original consolidation, and then we get these levels. Where do we reverse from in here? Well, 3.5 to -4 standard deviations is typically a turtle soup or a very high probability reversal area. This is very high probability reversal area because it's paired with this 15-minute fair value gap. We have this, right? So we have where did we come from? We have areas of consolidation down here. So the more and more that you study the market maker model, will notice this, right? So we have our low risk entry here off of that breaker. First stage distribution. Okay, first stage distribution, fair value gap right in there. We drive lower, second stage distribution where we have a small area of consolidation, but what's it doing? Respecting bearish order flow. Second stage distribution is your silver bullet. Right? You have 1, 2, drive lower, 3, 4 chances to enter this before we break down. Another small last chance entry, right? So you have 1, 2, 3, 4, 5, 6 chances to enter here. Just getting this move below the original consolidation is all you need, right? This move to this move. What's that, give or take? We're around, what's that, 625? Right? It's a very significant amount of points right there. Okay. Now, how do you know where can we target other than below this consolidation, right? Well, the last swing low here, see this little swing low, right? Before we reversed, we never took this high again. So this last run in here, we pull our fib from the high to this swing low, and we get 2 to 2.5 standard deviations, which lines up with our original consolidation, and we can target 2.5 right in here. Okay. Goes a little bit lower, but then we come back in and we close for the day. So go in your charts. If you want to, go and mark this up. It's on the 1 minute, but you're using the 15-minute, right? This is literally everything, right? Now we're framing the PM session, but the same thing holds true when we're looking at 9 o'clock to 11. So don't want to make this video too long. So if you have any questions, go ahead and tag me in the boot camp channel for this month, your current month that you're in, and or message me privately if you have any questions. I can help steer you in the right direction, whether it's time, specific times of the day, what you're looking for, how to enter, how to really dial in your model. Until next time, guys, trade safe.